Welcome back to another TradeOut's technical analysis tutorial. This is Introduction to Range Trading Volume 5. I'm going to teach you how to identify and trade deviations, which is very important when it comes to range trading. Let's get started. All right, so deviations. What is a deviation? Well, a deviation is a move above or below a range or key trend line followed by acceptance back inside of that range or key trend line. You're probably sitting there saying, what the hell is this guy talking about? Don't worry. There's going to be a few examples. I'm actually going to show you what I mean. But the thing about deviations that I want to be very clear is that they don't only pertain to trading ranges. You can have deviations of other formations as well. So let's say that you have a channel, for instance, like you could have a deviation above or below a channel as well, which that'll be in a different tutorial. But for those of you who are in VIP, for example, or watch my latest public update, you'll know that Rose USDT is a really good example of seeing a deviation outside of a channel. So it's the same theory, but it's just, instead of it being a range, it had a really nice channel that was in. So again, like deviations are not only for ranges, but we're gonna, we're gonna keep it to the range. We're gonna make sure that we apply it to ranges because that's what module we're in. So anyway, moving on. It is somewhat similar, and I say this very loosely. It is somewhat similar to a SFP or a swing failure pattern. There's an example that I'm gonna go over that actually has both. They're gonna be able to see what a swing failure pattern looks like and what a deviation looks like side by side. So I think it's actually really useful. But again, very loosely correlated. I would say similar trading style in a way, possibly. But again, like it is kind of like a swing failure pattern. So if you're familiar with what those are. And then last, to help minimize noise. And by noise, I mean, trying to figure out if you have acceptance below or above a level. If price is, if you're on like a 5-minute time frame and price is chopping through your range high or range low, for example, right? And you're trying to figure out, like, is this, like, am I ready to take a trade or not? To help minimize noise, I would use a higher time frame, like an hourly or a 4-hour time frame, right? So you're looking for closures. So that's going to give you, again, I think that's going to help you with the noise factor. Trying to figure out, like, do I actually have acceptance that I'm looking for to enter a trade? And again, if you're not familiar with what that is, we're going to have examples. But yeah, again, an hourly or 4-hour, if the range is mature. So what do I mean by if the range is mature? Well, a clear range high and a clear range low at minimum, meaning like you have to be able to define those levels. Which again, if you go back to the first video in this module, you should be able to do that after watching that video. And if you're still having a bit of a hard time, I would definitely go back and watch that before you continue with this video, because you definitely have to be able to define what your range high and what your range low is. Otherwise, it's going to be really difficult for you to identify what a deviation looks like. Okay, so that's what I will say early on in the video. And then obviously, having a clear range high and a clear range low, multiple touches of those levels are even better. So that's going to help you be able to identify, again, like, do we have a deviation potentially forming, right? Or like, again, like, do we have a clear deviation? And you're going to be able to see that a lot better if you have a clearly defined range high and range low. And then as usual, confluence, very helpful to have to back up your trade entry, which we're going to get into in the next slide. You're going to see confluence in basically every module that I do because it's a very important part to how I trade personally. But again, like, the more confluence I have for me to take an entry, the better. So some tips on how to trade deviations. And again, we're going to have examples very shortly, but I just want to give you some quick tips that you can keep in mind and kind of have this information beforehand as we go into the examples. That way, hopefully it's going to make a bit more sense. But some of the, some of the tips that I have, first of all, again, looking for clear acceptance back into, the trading range before taking a position, right? So again, by now, if you've been with me for quite a while, you're going to know that I use the term acceptance a lot, right? So I'm going to give you one way, which isn't my personal, like it's not my favorite way to define acceptance, but I think if you're starting out and you're a beginner with, you're a beginner to trading, I think this is going to give you a little bit more structure around that again, like it's not perfect, but I think, more often than not, it's going to give you that information that you need. But again, acceptance. So one tip that I have, maybe you wait for acceptance back into value area low or value area high, depending if you're looking for a long or short trade, like what side of the range you're on. So again, if you have a deviation outside of your range, what you could be looking for as far as acceptance is maybe not just the range low or the range high, but rather the value area low or value area high, which is very, like it's 99% of the time, it's going to be cleanly within the range. So if you're getting acceptance back into those levels, which again, we'll see in a minute, you're almost like you're guaranteed pretty much that you have acceptance back into the overall range, which likely means that what you were looking at was a deviation. So again, it's like waiting for like a lot more confirmation. The problem with that is that you're going to have to see, like, does the risk reward make sense at that point for me to still take that entry? So we'll get into that. Another tip that I have is I like back tests, which, is basically a way of confirming either support or resistance of those range levels when deciding to enter positions, which you'll see again in the example. But if price is re-entering the range, and then, let's say that, where price is, like price is moving down, and then we're getting acceptance back into a previous range, a lower range. And then price breaks the range high, but then comes back to test the underside of that range high, and you see that there's a rejection. That is a short entry for me. Like that is showing that there's clear resistance at that level. I don't need to wait for much else. Now, obviously, if there's other forms of confluence there, great. And, whether it be a fib, like a fib retracement or maybe VWAP sitting there, I don't know. There's like a lot of, other methods of confluence that you could be looking for. But the point is, like, I really like back tests to basically prove to me that that level is indeed confirmed, like that we are back in the range. Another tip is to help, again, so this is going to be from the previous slide, but to help minimize that noise. Again, if you're on a 5-minute time frame, again, and price is kind of chopping around through that level and you don't get a definitive move back into the range immediately, you can always look for a higher time frame, again, like an hourly or even a 4-hour, for better confirmation that that level is indeed lost. So if you get a 4-hour close back within the range, then you could relatively say that, like there's a good probability that we are back in this range. So again, it's not my favorite way to do it at all, but for beginners, I think it's acceptable. And then lastly, not really lastly, but for this video, is remember the overall trend. So again, this is really helpful when you should be alert for a possible deviation before it happens. So this is going to help you kind of identify, if like we are on alert, like if we're on watch for a potential deviation before it even happens. Because again, if you're like, I'll show you an example of that. But, if the trend is incredibly bullish, right, or incredibly bearish, then if price breaks the range to the opposite side of the overall trend, that should be a bit of I would say a concern, because that obviously could be a reversal, right? Obviously reversals are going to happen at some point, but that is usually a really good indicator to tell you, like, to be on alert for a deviation. And you should be thinking about that, because again, when the deviation does happen, if it does, then you need to be ready to take that trade, because that more than often is going to be a really, really good trade. So let's get into the examples. So I got a couple of examples for you, and I'm going to try to do my best to piece together everything that I just told you. Because I know that was kind of a lot of information there, especially if you're new. But again, like I will say that it's really important if you're having a harder time understanding the concepts that I'm talking about, then I really would go back and watch the rest of the range trading videos again to really get comfortable, because I think this video, so again, we're 5 videos into range trading, right? You get into this video, this is definitely it's starting to put more of the theories together. And it's starting to, this is where we get a little bit more in depth, I guess you could say, because by now, again, 5 videos into range trading, you should definitely be able to identify the range. You should be able to use you should be able to figure out how to identify your value area low, point of control, value area high, that type of stuff, even though we're not going to use it for this example. But you should be familiar with that terminology, what those levels mean, and all that stuff before coming to this video. So that's what I will say. If this is kind of like a lot of info, I definitely would go back, watch those first few videos again, and then jump back into this video. Well, here we have ES, traditional markets. Same thing works outside of crypto, right? So daily time frame, this is literally right now. So this is actually, again, like this is obviously really relevant because this is literally what happened right now. But again, like this is the example that you have a swing failure pattern right here. So we basically have this high, which is the range high that was put in on November 22nd. Again, price, look at this again. So keep in mind the trend. It's the very last thing I talked about in the previous slide, right? Trends obviously to the upside. And this is actually an opposite example of that. But anyway, coming up into your range high, price finds resistance, and this is where you get like your first significant pullback, right? To start your range that's forming. So this is the range high. Range low is basically the end of the downside move before we got the reversal, right? Yes, there's a little bit of a wick here. To me, like this is irrelevant which low you would pick. I like to pick this low because this is where we got the bounce out of. Yes, we came back down and actually made a slightly lower low, but to me, this is 2 touches. So hopefully that makes sense. So I'm more prone to use this because this was the initial pivot before seeing a bit of a relief and then coming back down. Again, it doesn't matter. This is literally like, it's a hair. Okay, so it doesn't matter which one that you use. I just prefer the first point because of the reasons that I talked about. High, low, range low, comes back up, and you might, I don't know if you can see this or not, but on this candle, December 16th, right here, let me just mark it. So on this candle, we make a higher high than your range high, but just barely. Doesn't matter. I mean, the wick could be long. But this is a very nice example of a swing failure pattern. You take out the high, big move to the downside, right? So like the second, again, making your high, price actually closes. Like this is a very clear swing failure pattern and a really nice short, which we didn't quite make it all the way down to the range low, which is okay. But again, this is a nice example of a swing failure pattern. Only to reverse to the upside and actually break above your range high, right? So on this big candle here, you get your big, nice, powerful daily close there. And then we get about a week of sideways before what? Dumping back into this range. This is a deviation. Here's your range high. Price breaks outside of your range, chops around for a bit. And this is a very definitive move back inside of your range. This is a short entry because price could not, again, wasn't strong enough to continue up and out of here, which by the way, a lot of people were probably expecting this to continue to new all-time highs. So, again, chop around here for a while, break up. I mean, this has kind of been the story. If you go back, very obviously like a huge, powerful trend. But again, a lot of people bullish at the highs. What happens? Big move down, right? So again, short entry, range EQ, pretty good area to look for to take some off. and then ultimately like the opposite side of the range, right? Coming into this support level. So what happened after that? Well, you got your move to the range EQ, which again, the range EQ is basically, it's the midpoint of your range low and your range high. You get a pretty big wick down here. What happens? Price comes back up and literally perfectly taps your range high. And what happens there? It rejects. So I'm just going to move this over so you can see that. This is the point that I'm talking about now. So again, this move down, basically price moves back into your range. Big nasty candle. Confirms that this is a deviation. Now you're looking for a rotation to the downside at this point. Because again, deviation. So it's to the upside, back inside your range. Now you're looking for lower prices. You get this gift, right? So let's say that you missed this trade. And you're like, oh, I missed the deviation. You literally get a gift entry right here on this rejection of your range high. So you come back down and, you know, push back up into your range high, rejection, nasty candle. Like this is giving you a second opportunity to get back into that short trade. And again, be looking for range EQ, target 1, range low, which we're almost at right now. This is honestly a pretty good area around this previous low here. Like this is an acceptable take profit too, to be honest with you. Or again, you can try to see if you get the full move down to the range low. But for me, I'd probably take profit here. Because again, like you could look for this range to continue. Like there's nothing that says we have to break down here. This range, even though like we haven't, like this has been a really strong trend, there's nothing saying that you just can't have like this ranging, you know, price action for a while. Who knows, right? But anyway, so this very clear deviation, acceptance back into the range, that's your short trade. That's your trigger saying, okay, this is my entry. If you missed it, which I mean, you could probably go down on lower time frames. I think this was actually pretty nasty. Yeah, this is a pretty nasty candle in. So again, like here, and then getting a bunch of, you had plenty of time. Like this is a short all day long. Range EQ, target, or it's basically TP1, take profit 1, take profit 2. Probably where you're at now. Which, yeah. So now kind of like thinking ahead. Okay. So like, again, let's say you took these trades, great. You're probably out of them. At least for me, I'd probably be out of them. Or, you know, take profit 2. And then if I wanted to leave some on because I think we might break down out of this range, I probably don't have like much of a position left. The thing that you can always do as well is, again, if you start to break your range low and really get acceptance below it, obviously you got to be on deviation alert, which is what I'm going to get into. But that is a potential place to take a new position on. Okay. But one thing that I would be aware of if I'm looking for this range to continue is obviously, again, we're at the range low. So for me, again, if I'm short, I'm probably looking to get out of my position, possibly even flip long here because we are coming into what I would deem as support. But keeping in tune with the theme of this particular video with deviations, I want to show you what a deviation to the downside would look like, right? So what would get me, what would, in my opinion, would be a really bullish setup. So let's say that we actually broke your range low to the downside, okay? And then kind of similar thing, chopped around, did something like this, and then did this. So basically a move up. Maybe, you know, again, maybe you get your back test, maybe you don't. This would be a deviation to the downside, so opposite of this, right? So again, if you get price basically losing your range low, getting acceptance outside of your range, what do you think, like, would, in this circumstance, most of the time, like, you'd probably be looking for lower prices, okay? So, like, you can't, like, I don't think it's very smart, in my opinion, unless you're coming into other major levels here, which I think there's probably a local golden pocket somewhere around here. I don't want to pull it, but there's probably is a little bit of support that we're coming into below here. But again, like, I would be a lot more cautious because we're starting to lose this ranging price action, right? So like we're starting to lose this range. You get acceptance below the range, you would normally be looking for lower prices. For me, it's risky to get along into here unless there's other analysis. Maybe it's a golden pocket, point of control, something like that. That's like telling you, hey, this is like a really good area. Really good risk reward to take along. But sticking to range theory, this is a very poor place to take along. It's very risky because you're losing range support. And you don't really want to see that, right? If you're trading the range. So just like this was very bearish short term, doesn't mean this is game over. But again, like what was very bearish, getting the deviation above the range and then falling back in, same thing applies to the downside. So losing your range low, getting acceptance below, but then getting acceptance back inside the range. This is a long opportunity. And how I would trade this is exactly kind of how I, again, let's say price chops around, reclaims your range low. This is your entry. Invalidation, probably below your range low. Target 1, target 2. Okay? So let me redo that. Do it in maybe a little cleaner. I guess I should leave that. You wanted to take a long position. So this is basically how I would look to structure that. So my stop loss would probably be, my initial stop loss would be below this low, because again, if price got acceptance back into this range, but then lost it again and started to lose this low, that to me signals a very high probability of a potential swing failure pattern, which you would be aware of. But I think what's more likely to happen is lower prices, right? So you would probably want to exit this trade. But again, so let's say that this was your entry for whatever reason. If you got a retest, even better. So like something like this, right? So let's say that you had price come back down, but then it came up to retest and you see a rejection. Same thing here. Price re-enters the range from underneath and then pulls back a bit and shows support at this range low. That's a really nice long opportunity there, right? So again, here doesn't really matter. You'd have to do you'd set up your trade that way. My preference is to get a push back into the range and then a retest, preferably coming into some kind of like Fibonacci confluence, something like that. Like that's usually a pretty decent trade. But again, my invalidation would be behind here for now, and I'll talk about why in just a second. But again, we broke this low, pretty good probability that you're going to see further declines. Target 1, range EQ. Target 2, top of the range. Basically looking for, again, another rotation back to the top of the range where, again, like if you're expecting the range to continue, that's how I would trade that. Target 1, target 2. Now, so I wanted to talk about invalidation. That's right. So let's say that you're in a long trade and, price does this thing where you're kind of like chopping around, looks like it's doing okay, and then kind of rolls back over, loses the range low. So your stop isn't necessarily hit, right? Your stop isn't hit because your stop loss is back here. If I start to see a lot of acceptance, meaning, again, like from the tips that I shared earlier in the video, for me, I don't like to use closures as often. There's some instances where it's very, like, to me, it's very clear, definitive that, if you get a higher time frame close above or below a level, that it's like there's a very high probability of continuation. But in this case, I might not necessarily wait for my stop loss to get hit. Because to me, if we get acceptance back below the range low yet again, the reason for me entering the trade was because we were getting acceptance within the range. Like that was my thesis for taking this trade. If we start to lose the range low again and get acceptance back outside of it, this all of a sudden starts to feel less like a deviation. Now it is a deviation because again, you got your chopping around price back inside. But what I mean by that is if we come back out before hitting, take profit 1 or something like that, this would start to feel again like the reason for me entering this trade isn't working out at that point. It's kind of like that's usually a pretty good exit sign. And the thing about that is, again, if you're getting entries around your range low, looking for a move higher, and you get acceptance below your range low, the thing is, like, you don't really have to risk. You're not risking very much at all to take a shot on this trade, which this is honestly a pretty good long setup if it was given. So hopefully that makes sense. So again, I explained why my invalidation for my trade would have been here at first, But then if we get real acceptance back inside, price chops around for a while and then loses it again, to me, that shows weakness. Because your range low, especially if it's well respected. So in this instance, you know, you only got, like, I would say that this isn't that great of a range low yet. So this is not a phenomenal example, if I'm being honest. Your range high is a beautiful example, though. 3 perfect touches. I mean, so you get 2 flawless touches, a little bit of SFP here. But again, your deviation back inside and rejection at range high. I mean, this is as perfect of a range high as you're going to get. So this is a beautiful level. To the downside, not as much because we don't have like this type of confluence, right? But let's pretend that you do. And that this range low was very well established, like your range high is. Hopefully that makes sense. Then yeah, again, like if I saw this kind of price action, I would be a bit concerned if you started to see acceptance below your range low, and I would probably cut my trade there and minimize my loss, right? Because here again, if you enter near range low and you're exiting pretty close to range low, your loss is very small. And I prefer, like, when it comes to trading, you really want to minimize your losses. So you want to let your winners run, right? Maximize your winners. But your losses, if you see a reason to exit, that goes again. So, you know, again, this to me isn't reacting. You know, some people get really afraid when they start to see red, so they cut their trade. Like, to me, there's a legit technical reason why you might want to exit. If you're not sure, no harm in just waiting for your stop loss to get hit, other than you're going to lose more money if it does get hit, right? But again, if you feel comfortable, if you traded ranges for a long time, I've done this many times before where I don't wait for my stop loss to get hit. I exit because I see signs of weakness, you know, and there's probably some other factors, you know, maybe, you know, the rest of the market isn't looking that great, whatever it is, right? But you know, more often than not, when I've exited my position, my stop loss would have got hit. So that's a way of me preserving my capital, looking for another clean setup to redeploy it, right? Versus letting my stop loss get hit and losing an extra percent or whatever it is. It's just being protective. So this is a more, you know, how I defined where your stop loss would be. If you're just starting out trading, I'd say, like, I would stick to this because this is it's a lot more defined area to cut your risk, right? Like, it's a clear level. But as you get more comfortable trading ranges, then I think it's totally acceptable to cut your trade earlier to prevent potential larger loss if, again, like, you're comfortable with trading ranges and you've done it a bunch before. And so that's what I'll say about that. So let's move on to another example. All right, so second example. This one, again, should be really familiar, especially if you're in VIP, because we talk about it quite a bit. But this is Bitcoin USD, and this is the literal range that we're in right now. And we've had a deviation, which you could probably see at the moment. We had a swing failure pattern even, which you can hopefully also identify. But if not, that's okay. We're going to go through it, and I think this is a very, very, very good example. So I'm going to try to break this down as best as I can. Again, utilizing the, you know, especially the tips that I shared in the previous, in the slides to kind of like put everything together. I think this is a great example of not only a range, but seeing a deviation and how to play it. Like, this is a very, very, very good example. So first of all, I guess let me get rid of this so we can make the chart a little bit bigger, easier to see. Hopefully that helps me. That should be good. And also I'm going to incorporate your value area levels so that you can see how to get, again, like, to give yourself a bit more confluence as well. So I didn't use the value area levels previously to give it a little bit simpler look. But in this case, I'm going to throw those on as well. I'll actually hide this level because it's not relevant to this current video. But again, you have your range high, you have your range low. I actually don't have the EQ on here, but I'll show you how to get it really fast, just because it's probably going to be really close to that point of control. So just pull a retracement. All I'm looking for, all I care about is the 50% mark. Basically right here. So this is your range EQ, which again is basically the point of control. So when I'm trading a range like this, especially when the point of control is around the 50% mark, I don't always mark off my range EQ because I can kind of visually know where it is, right? Like you don't really need to have your range EQ and your point of control. For me, the level that gets like that is more relevant is the point of control. That's the level I actually care about when I'm trading ranges. That is like the level that I really want to know where it is at all times. The EQ is helpful, especially in newer ranges, I'd say. But I'm going to delete it. But I just wanted to show you. You saw how I got that. It's basically just, again, it's literally the exact midpoint. It's 50% of your low and your high. So it's just the average, right? Just right in the middle. So I'm going to delete it because we don't need it. It's basically, again, the point of control is more important. So you have your range high. You have your range low. Now the range high, which I'm trying to remember if I did this in a previous video or not, I don't know. So I'm just going to do it again. We had this killer range here. You could see where this range low was, broke to the downside, big flush, and now we're forming this sideways range. So again, big flush. This was your high before yet another flush to the downside. So this to me is the level that I'm going to want to watch and be aware of. This is going to be my range high. And then the range low is simply like the low at this time, right? So I mark these levels off very early. Like again, that's one thing that I will say. If you practice this enough, what will make you a lot of money is being able to identify these levels before they're relevant, if that makes sense. Like having, again, this is going to come with time. This is going to come with a ton of practice, a lot of experience, just doing this over and over and over again. But being able to identify ranges before they become real ranges, if you can do that successfully over time, you're going to do very well. And you're going to be ahead of majority of the traders that are out there, because I honestly believe that a lot of people can't do this. They're like, a lot of traders are directional, right? They can, which is okay. It's like, again, people, I don't want to knock anybody. But I think if you asked a lot of traders out there, they like directional trading. It's kind of easier to follow the trend, right? It's not that difficult to follow a trending asset. Some people make it harder than it needs to be. But if you ask, I would say most traders, like what's your weakest part of your trading game, right? Or like where do you lose the most money? I can almost guarantee you people are going to say in ranges, like because people get chopped up. People get the urge to trade. They feel like they need to trade, but they just get chopped up in ranges because A, they're unable to identify them early, right? And then they're not able to identify like key range levels. So they're just kind of, it's like a guessing game. So I think that's the honest truth. But anyway, you practice this enough, this could become like a very awesome part of your trading repertoire, and I think you're going to do very well. But anyway, so range high, explained how I got that, which again, I picked this very, very early on. Range low, very, very early on. So if you're in VIP, you would know like that these are the levels that we've been discussing. 40,500, been on my radar for a long time. Very quickly, this is a killer swing failure pattern here. You had a double bottom. That's usually ripe to get ran. This is like, so this isn't really related to this video, but swing failure pattern, clean, clear double bottom here, you're asking for that to get ran, which is exactly what happened. Price came back down. Nice, strong swing failure pattern. You even got this, which this is what I like to see. So this does have to do with this video. You're going to see a nice example of confluence. So I'm pretty sure that it went up and then down. So that's why I'm pulling, in case you're wondering, well, I'm not using this wick and I'm using this wick. I'm pretty sure it went up, down. It doesn't matter. Still hit it. But you can see it came into your golden pocket. 61866, right on your range low. That's that. If you miss the swing failure pattern, getting this retest back at your range low, strong, even if you didn't catch this bottom, which by the way, again, hopefully you did, because this was a phenomenal trade. Even if you're buying it later, you're still, again, getting acceptance back above value area low. You back tested your range low as support. Really nice, strong reaction off of that. You should be long. So there's multiple entries here, but again, like just showing you confluence, right? So this is one thing I talked about in the slides, confluence, confluence, confluence. When you have other indicators or other analysis lining up at key levels, this being your range low, telling you to take that trade, you got to take the trade. So again, it's kind of getting a little sidetracked, but I thought that was a really, really good one to point out. But again, coming at your range low. And what also happened here, validating. So if this wasn't clear enough to you, these two perfect touches, you have basically a double bottom at your range low, get it ran, but then it comes back tested a support. Like this is concrete. This is 100% range low. Like this is a concrete level and still important going forward. I would still want to be aware of $40,500 if we do come back down to this level. To the upside, your range high, you don't get it tested until you get your deviation. But why was I concerned for this area to be a deviation to begin with? There's your trend. Nasty trend. So this again is at the bottom. So when the slide tips on trading deviations at the very bottom, remember the overall trend. So obviously like the trend, when like you should be on alert for a possible deviation. The deviation I'm talking about is right here. You should be on alert for this deviation to happen. And you should already, again, like you should be prepared for this because look at your overall trend. It's nasty to the downside, right? So you're getting a move back above your range. This should tell you, again, like this is nice if this can maintain, right? But if you get this candle, which again, you could even just go based on an hourly close. So again, this is you know, using a higher time frame. And again, when you're trading this price action here, an hourly is like a relatively decent time frame. I would say that's pretty fair time frame to, you know, use. Even a 4 hour if you want to like really like get, I would say like confirmation. But what happens? Price comes outside your range high, chops around just like you saw in the previous example. And then you get a big, nice move down. Back below your range high. All right, so let's pull this. So I'm going to pull my levels just to kind of like see where your value area levels were before. You can see that's they're still where they're at. Okay, value area high, point of control. These are the two main levels that I want. So when price made this move down, these were your levels. So where did price stop? At value area high. So again, candle closes well within your range high, showing you again, like this is pretty definitive. Acceptance back below your range high, stops at your value area high. So again, showing you a bit of support, but then this happens. So it's kind of hard to see. But here, stops at value area high, comes back up to your range high to retest this again, resistance, and it's rejected. Right here is an outstanding short position. Outstanding, because again, the risk is you don't have to risk a lot to find out if you're wrong, right? And just to kind of show you kind of how I would set this up. And look, like if you want to wait for closures, you can maybe like wait for this to be a really clear area. Honestly, like as price comes up into here, like I'm probably getting an entry pretty close to here, but I'll do it just for the sake of this video, just to kind of be a bit more conservative, I guess you could say. So invalidation, again, probably above the high just to be safe, like just a hair above the high. And then again, like you have to figure out for yourself, is the risk reward worth taking? Okay, so like this is all stuff that you need to figure out for yourself. And this comes, you know, risk management. But for me, first target that I'm targeting, point of control. So if I'm getting acceptance back into my range high, so this to me is one. Like this is like I'm in, okay? If you want to be ultra safe, which leads me back to, again, the slides, like you can wait for like acceptance back below value area high. The problem with this is at this point, which again, like you get, this is very clear, crystal clear that you are not only back within the range, but you're below value area. Like this is crystal clear acceptance. The problem with this is that your risk reward is really bad at this point if you're looking to take profit at your point of control, right? Because like your stop loss and your like your risk reward on this is just not very good. But ultimately, again, you can see why point of control is always such an important level for me. Like this is where we find support. Okay, so again, to me, the best entry here, which was very clear entry, and like I'm not going to talk about it in this video because like there's honestly like there's other entries here, but I don't want to get outside of the scope of the video. But getting acceptance back within the range, there's your entry. Honestly, it very easily could be, very easily could be up here, and honestly should be. But here we go. Again, leave your entry the same, doesn't really matter. And then first take profit, point of control. So this is a legitimate trade setup that I think is, again, like when you're trading the range, you get your deviation, acceptance back inside of the range. That's a short all day long. Target 1, target 2. So like value area low, golden pocket, that's gonna be that definitely gonna be a take profit too. If you didn't want to take all of your trade off between those two take profits, target 3, range low. And then you'd probably be done with the trade. Then you reanalyze, go from there. Because then technically you'd be a support. Very well-defined support, right? Well, technically you got a swing failure pattern here, but nice back test. And, you know, you literally rotated all the way to the top, deviated, and came back in. So, again, I would still be very aware of 40,500. I still think it's support. But, again, that's literally how you would set this trade up. So that is like A to Z how you would set this trade up. That's a very nice short trade. How did you do? Well, depending on your stop loss, which here's what I like, and again, I think this is really good for newer traders, and this is how I very likely would have done it, is so stop loss, I'm sorry, your entry, take profit 1 here at point of control, stop goes to entry. Doesn't matter where your entry is. My stop loss will go to entry, and you probably would have got taken out, which is okay. Doesn't matter, because what did you do? You locked in profit. You move on to the next setup. It's that simple. But probably would have taken a pretty decent amount, like off at point of control, because it's a huge level. Point of control, target 1. So hopefully that makes sense. Your entry, take profit 1, take profit 2 into this golden pocket value area low, take profit 3, range low, and be done. That's it. So this is your deviation, and you got a very nice trade down to the point of control. Now there's a second trade here. So one thing that I'm going to do again is re-pull this so that we have accurate levels. And you already know this is the area I'm going to be looking at right here. Okay, so you can pull all the way to the edge, all the way to this candle. That way you get current data. Funny enough, doesn't really move. Okay. Your value area low shifts up a little bit. That's basically it. Value area low shifts up a little bit. Everything else remains constant. Looking at how much volume came in over here, this is probably going to be your point of control for a little while. And funny enough, I mean, this is like jumping ahead, but you can see there's still a lot of price action here. So anyway, here's another trade opportunity right here. So ranges, I love ranges. But what happens? Push back up to your range high. So we're testing the range high again. And look at your hourly candles. Let me delete this just so you don't need to see. It's kind of like messing it up a little bit. But look at this candle, right? Push above, closed here. So it couldn't close outside of range high. So basically rejected getting out of your range. And then you start to get a bit of a pullback. So this to me, again, is another nice opportunity for a short trade. Why? Because it's so easy to know, like, and I'll give you, it's going to be a little bit similar to the previous one. You can use a stop loss above here. I do not think you need to do that. And here's why. Okay. So if you're new, maybe you want to do that, especially if you're able to snipe an entry around your range high. One of two things. So your target one is going to be here at your back at your point of control. You could put your stop loss above this high, but if you get acceptance above this, so let's say you have your candle here, right? Price comes down, and let's say that instead of continuing lower, that you had something like this where price moved up and then chopped around and kind of did this. Is there any real reason for you to remain in this trade? No. For me, I would cut this trade. You're getting acceptance back outside your range high. And at this point, it would look like there's a pretty good chance for continuation higher. So I wouldn't want to wait for my stop loss to get hit. Again, this is another example of like how you can manage your trade. Okay, so when you get more comfortable trading ranges, again, you're getting acceptance back outside your range high. For me, I'd probably cut that trade. And I wouldn't wait for this. And like, I don't like to really do like put my stop loss behind here. Although like one thing that I will point out that happens a lot for those, especially for those of you VIP who like you've probably seen it. This high has a tendency to get actually swing failure pattern, and then you get the real legit move. So that is a case to keep your stop loss above this high. If this high gets ran, very high probability we're moving much higher. Okay, I will just say that. So if this is within your risk profile, so like if you accept this amount of risk, then yeah, I think like this is an okay stop loss. The problem is I think you could probably make an educated decision before it gets hit. That's likely to save you some lost money. Okay, but looking at a candle like this, especially if price chops around here and is grinding out around this range high, then like the odds of this getting a swing failure pattern and then coming back down is elevated. I will say that. So that is one reason why I think using a stop loss, like a deeper stop loss, is acceptable. But for me, I wouldn't do it that way myself. But again, it's fair. So hopefully that makes sense, like on when I would exit this short trade early. Again, it's getting acceptance back above your range high. I would probably be out, and I'd want to reanalyze my thought process around it, right? Because obviously like that didn't work out. So like I would want to wait for another like really clean setup. But whoops, I guess I just had to leave that for right now. But it worked out. Obviously, like this was another really good trade. Tried to get above your range high, rejected, stayed within your range. This to me is a really good, this is a great short trade to take. Same thing, right? Point of control, target one. Same target two. Why am I keeping this the same target two? Because it hasn't been hit yet. Does that make sense? Golden pocket, value area low, it's still relevant because it hasn't been hit yet. It didn't get hit here. You came down to your point of control and then likely got stopped out if you move your stop loss to entry. So again, like still the same level. Take profit 2, take profit 3. Which, if you took this trade, you would have hit take profit 1, and you can see you find support. This is another reason, again, point of control, very important. It's support until it's not, right? Came in right to your point of control, got a bit of a bounce, chopped around a little bit, ultimately pushed down into your golden pocket. Look at this. This is actually when stocks closed yesterday. Got a little bit of a scam pump there. But ultimately, again, if you didn't take profit 2 here, you definitely got your value area low touch here. Right into that value area low, golden pocket. And then again, your stop probably still at entry. You hit 2 take profits. You're chilling. Good shape. Doesn't matter if price comes up, takes you out, who cares, right? You still have that take profit 3 on the table. Very good trade. So there are actually, I mean, I'm not going to count this because this isn't necessarily have to do with this video, but just in this range, there's many great trades to be had just in this range. We've been in this range for almost 2 weeks. Basically 2 weeks. So again, like these are phenomenal trades if you're able to identify those levels. So again, deviation here, very important. Overall trend is nasty, nasty, nasty to the downside. No reprieve, basically just straight down. Coming into your range, deviation here, boom. Very nice trade. So that is, let me think if there's anything else that I can think of that's on this chart that I think is relevant. I can delete this now. But I think that's really it. So like hopefully this example made sense. And again, like why you still can use your value area levels, like why you definitely should know where your value area levels are. And you can tell like I didn't talk a whole lot about the value area high. The reason for that is, which I'm actually glad that I remember to talk about this, it's so close to your range high that to me it's less relevant. Is it still relevant? Yes. But it's not as like important, you know, it's not that important to my analysis because again, it's super close to your range high. This is the level that I'm concerned about. Now, once you start to get acceptance below your value area high, that gives me more comfort knowing if I'm short, right? So if I'm shorting this and I'm starting to lose value area high, then yeah, like that's more relevant. But to me, the basis of this entire trade setup comes off of your range high retest or deviation. It has nothing, like it's not the value area high. The only thing that, again, value area high in this case is interesting to me, again, is like if you're newer and you want more confirmation that you're getting acceptance back into a range, right, to feel safer to take a trade at the risk of, again, like losing, you know, like waiting for confirmation is, you're not, you know, you still have to figure out if your risk reward makes sense to take that. But getting more confirmation gives you an increased probability that price indeed is going to move to test lower levels. But anyway, that's kind of, so that's the case for the value area. However, I didn't really speak about it that much, but I definitely, and you can see how, and like, again, using your other value area levels, specifically your point of control and your value area low, having confluence there. So not just because it's the range value area low, it's because it was the golden pocket as well. And you can see what happens when you come into that region, right? So hopefully, like, I feel like this video, this is probably going to be one that you might have to watch 2 or 3 times to let this sink in. I think there's a lot of information here, but if you really take the time to understand this, I think it's really going to help your range trading. So hopefully that this video has helped do that. So here is my social media where you can interact with me. Obviously, I'm in Discord. If you're in VIP, we talk every day. But I spend most of my time in Discord for sure. If I'm not, well, that's not true because I'm always in Discord, but one place that's easy to reach me typically is Twitter as well. So like if you just tweeted me on Twitter, tag me, you know, like I'm definitely spending a lot more time on there these days. I'm not really on Facebook very much. Please don't contact me there. I know this is an old slide. But you know, I'm not on Facebook very much. Telegram, you can reach me there. I get a ton of DMs there, unfortunately. It's not that it's unfortunate, but it's just, it makes it really difficult for me to keep up. Same with Discord. I get a lot of DMs there too. But the easiest way to honestly reach me is in Discord. Just tag me in chat, and it's very easy for me to see that. It's much easier than DMs, to be honest. And then on Twitter, same thing. Like, just tag me, and you know, like I'm happy to have a conversation. So hopefully this video helped. Again, might have to watch it a couple times, and this is quite possibly going to be a part 2 to this video sometime in the future, because again, you know, if I see more another like few very relevant examples, I'm probably going to do another video on it, because this is, again, it's kind of one of those a little bit more in-depth topics. With that being said, hope you enjoyed the video. Trade safe out there. We'll see you on the next one.